Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about Euro USD because at the moment we do have quite interesting price action and structure. Now, first I will be covering the technical side, then we will move to the order flow. Now, starting here on the monthly, what we can see is that we have a market which is currently testing a very strong area of previous monthly support, which is now turned resistance here. Now, as we're testing previous support and resistance, we could expect a potential rejection lower. We can also notice how we do have an impulse and correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market is testing exactly the 0.786 of the Fibonacci taken on the monthly impulse, creating a very strong confluence of resistance and supply at this zone that we could expect the market to reject lower. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market is currently testing a previous supply area. In fact, from here, all this rejection lower was created. At the moment, we're testing exactly that same zone, from which, once again, as we have already identified on the monthly, there is the possibility to see the market create a rejection lower. Going down the daily time frame, what do we have? Now, from a daily perspective, I did speak about Euro USD a few days ago, after the market had created this M pattern here. I made a full breakdown explaining all the reasons for which we could expect a rejection higher. I also spoke about Euro USD after this impulse. I explained all the reasons for which I wanted to see first this correction and then the continuation higher. Again, that is exactly what the market did. And by the way, I will link in description both these previous analysis, so you can go and check them out for more free education. However, at the moment, what kind of structure we have? Now, from a daily perspective, it's pretty clear that currently we still have bullish structure. In fact, the market has been creating a series of higher highs and higher lows, and we are still above the previous daily resistance, which was acting as resistance here and again here, which the market broke to the upside at that point, started acting as support here and again support here. Now, until the market will remain above this previous daily resistance turn support, it can easily continue higher. However, in the market, the higher probabilities always come when all the directional timeframes are showing the same direction. And in this case, we do not have that because monthly and weekly are bearish, as we have previously identified. However, the daily is still bullish. So in order for all timeframes to be showing the same direction, what we would actually need is a break of daily structure. We need the daily time frame to break below this low. Now, if the market would do that, at that point, this previous support would become resistance here. So if we do get the break, at that point, this previous support would become resistance, and on the retest of the previous support and resistance, that is where we would have the highest probabilities for a potential rejection lower, because monthly, weekly, and daily would all be quite bearish. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which essentially are hedge funds, what we can see is that with the last report, once again, net positions got increased from 122k to 124k. We had 3.9k longs added once again, so longs increased. However, it's the first time since quite a lot that we do see shorts getting increased for two reports in a row. We went from 116k to 118k, now 120k. So institutions have already started adding shorts. Now, also keep in mind that if you're checking the data for the euro, you're actually already checking Euro USD because all currencies on the spot are traded against the USD. So if you check the data for the euro, you are already checking Euro USD. This means that at the moment we are already starting to see institutional orders to the short side, meaning that if we do get a break on the retest inside of here, we could have even more institutional shorting, and at that point potentially also the closing of longs, because at that point it means that they would be taking profits on the longs that they had been adding during all this move to the upside. So if we do get the break on the retest, how we could be approaching this potential rejection lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment you have the possibility to join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.